Hi traders, welcome to Profiling to Profit. Today is June 19th, 2016. If you're in the United States, it is Father's Day, so happy Father's Day to everyone out there. Hope you're having a great weekend. Let's get to it. We want to take a look into next week, see what the news brings, and of course any speakers, as well as what the profile is maybe giving us opportunities for. But first, let's start, of course, with our economic calendars. Last week, I've been out for the last couple weeks, so Josh did a great job of bringing us some areas of interest, and we'll look a little bit at those as well. But last week, obviously, FOMC was a big deal. And this week, it's Janet back on tap again to do some testifying, I believe, in front of the Congress. Or the House, excuse me. So in front of the Senate Banking Committee, and so she'll be doing that on looks like Tuesday. Yep, Tuesday, and I think again she finishes up on Wednesday the 22nd. This one's in the House Financial Services Committee, so there will be a lot of discussions revolving around the economics of the United States, interest rates, etc., etc. So she will be grilled quite heavily, I'm guessing, and that will be a market mover. So you definitely need to be aware of when those times are. Now, as you notice, Monday there's a light. Well, there's really no news out on Monday other than Neil Kashkari speaks on Monday, but I wouldn't say that's a big market mover. But we probably are anticipating a little bit of light volume on Monday, or maybe just a finishing up of what was being cleaned up on Monday, being that it was triple witching, or it was a quad witching, I'm sorry, quad witching on Friday, and of course there was a lot of repositioning and rebalancing of portfolios and stuff. So not a lot the rest of the week after Janet speaks. There's just the regular news that we see on a weekly or a monthly basis. Economic calendar overseas, there's not a lot there as well. I saw one red, where was it? I say non-monetary policies ECB meeting, so that's probably not going to be a huge market maker, but we'll talk about the currencies as well as the euro in this video today. So, all right, let's get to the markets. Let's start with our trusty, and let me bring this in a little bit more so we can see it here. All right, so the NASDAQ, we saw some sell-off quite heavily. They didn't like the fact that what Janet had to say in the FOMC, so we saw a lot of movement to the downside this last week, and we gapped down pretty heavily. And if you remember, we talked about the area up here of 4484 and you know, pretty much up to that 4500. We got above that, and for 2 weeks we just sit there and we rotated above that area quite heavily. Now the risk now was below that area to swing back up and take these highs out at 4573. One thing I want to point out before we get going further in this is that look at all the other indices, especially the ones that we like to look at, the NASDAQ, the ES, and of course the Russell on here. We noticed that the only one making all-time new highs was the ES, and that's pretty telling because the Russell got close. Their highs is 1206. They were down. Looks like the high was 1191 and some change. So they were 10 points away. The Nasdaq not even close. Okay, not even close. So let's take a look at the Nasdaq. Where would they have gotten, excuse me, to get to that point? So that was 4739. Looks like we traded as high around that 4540, or we were quite a ways away from that. So the Nasdaq's not participating on the upside. The FANGs, all the tech stocks are wearing out right now. A lot of people are, you know, probably not as enthused with them as we go forward, and of course that's weighing heavily on the Nasdaq. So what do we see here? Well, what we saw was this rotation we've been talking about, and we thought that, okay, if it gets above this rotation, above some volume areas and that we identify, we could see a swing, another swing up, maybe catch this 4577, which is above these highs up here. It didn't play out there. It got rejected, obviously, because of FOMC and maybe other things as well, the tech stocks, and so it cranked down pretty hard. It did bounce. It met some rejection at a high volume node, and then, of course, finished on its lows last week. Pretty interesting. So where's the where's the risk at here? Where can you get involved and see some targets hit possibly? So the first area of risk is going to be this probably the 44.27 area up to the 44.37 area. Risk is going to be right above this. Looking to take these lows out, and of course then these most recent lows, we had a couple, this congestion area which we've now entered, and we expect that to eat down and catch these lows around 42.74, and then we have a definite a place of support down here at 42.56. So that's the first resistance up above. The second would be the original, the one that we saw, which is now sort of as you can see here, we're boxed in here. We're going sideways now, 1, 2, 3, 4, 4.5 weeks. We've entered right back into that box, and we should go down and test the lower side of that box. So we're looking for any type of push to the upside to get rejected, and we'll go ahead, and of course we have a POC down here, 43.29. Go down and see this nice support at 42.60. Now the challenge here is if we gap down on Globex, which would be tonight here. Actually just opened up a couple hours ago, or excuse me, about a few minutes ago, excuse me. So the challenge is we have to see how far they gap it down, take it down in the European session. That will tell us a lot. But right now, keep an eye out for those areas. Going forward, again, also remember that we have Janet coming up, so she can be a market mover on that. So let's go ahead and take a look at the ES. The ES was the same situation. Okay, went and made new highs, got rejected pretty heavily actually. So now let me see if I can pull a different chart up here. So it's not the one I wanted. All right, so now the risk on this is going to be this zone from 2091 up to 2097, almost a 10-point zone. Risk is going to be just above this area here. If we go ahead and this zone holds us down, then we have a good shot at taking out the lows down here at 2022, and then from there we're off to the races at that point. And if we do get off to the races, let's take a quick look at where we could go on that. If we go ahead and take out that 2022 area, we have a little bit of support at 2016, but the acceptance area is right in here, down around that, let's just say 2000 even, 2000 to 2005 even. So could be a very nice trade for a low amount of risk in there. All right. I'm sorry, I'm having troubles clicking here. I got to get back into the roll of things. Let's take a look at crude. Crude has done some interesting things that we talked about a few weeks ago. We're not looking long at all on crude. We were always looking short, the opportunity to get short. We figured that when crude decided to roll out of bed, there was going to be some great opportunity for it. Now, Josh talked about in his last video of a target of 47.27, which was obviously hit. So 47.27 right back up in this area right here. It obviously came down last week, took that target out and kept going down in that 46.11 area. But he also talked about a bounce back up to that 48.50 area, depending on your time frame and your hold times and how much how much risk you're willing to take. These two trades worked out very nicely for you. Now, where are we at in here? This has some cleaning up to do here at 46. The way I look at this, and our risk is going to be just above this 49.60 area. I would say 49.80 up in this area is a risk. We have this zone right here. If this zone can hold the market down, the challenge here, let's just start here. If this zone can hold the market down, then we have another target at 47.15. Then if we get really weak, we have 45.07. Just make it 45 even, and then of course down to 43 even. Very little risk for a monster opportunity here. I like this opportunity to the downside. Now the challenge here for crude is on a market profile basis. We have two challenges. We have some cleaning up to do at 51.34 and just above it, and then of course we have this cleaning down here at 46.15. Right now we're sort of in the middle of that. So which way does she go? I'm going to choose the weak side. I'm going to choose to the downside. On the short side, I like it better. There's been a lot of selling in here. There's some selling needed in here, and there's some opportunity to the downside to clean up some messes that we haven't seen for a while. So I'm looking to put my risk, my capital to work up here with a little bit of risk up atop, and see if we can't get a nice move down further at 45 and of course 43. Also, guys, when this can't be done blindly. In other words, if you do get involved and you get into this trade, you've got to manage the trade. You just can't go, oh, okay, I'm going to stick my stop up here and then let's see if it hits 43. Yeah, you could do that if you got unlimited amounts of capital. I don't recommend it. I recommend managing your trade, pulling stops, taking profits, et cetera, on the way down to that 43. The 43 is just a target that you would like to receive, and so is 45. So crude has some really nice opportunities coming up, we believe. All right, let's talk about quickly gold. Oh, beloved gold. I can't believe what happened last 2 weeks in gold. We had first, let's talk about the wedge we've been watching here for quite some time. We had some tremendous trades in here. Went sideways at this nice bull flag. Price moved outside of this bull flag. We thought, oh my goodness, it's starting to create value up here. This thing is going to continue on. It got absolutely rejected. Back into the balance area here, or the acceptance area. Then, of course, they tried to poke it out again and got rejected again, which is telling us what? Couple rejections back in the balance. Guess what? We're going to roll over and go test the lower area. What did we do? The flag lower area got tested. Then we went ahead and tested these lows of 1211 and down here to 1205. Then we had this monster move. We thought maybe there's a little bit more movement to the downside. We're balancing nice here. Of course, gold never, gold has a tendency to, when it decides to leave the area, it tends to go quite heavily. And again, to the upside it did. It moved back into the balance area and then has rolled right back up to the upper area and has now since broken out. Okay, we've made new highs on here. So we have the path of least resistance is to the upside. As we talked about this, George Soros was buying gold pretty heavily. This may have been a nice buy area for him to add to. We don't never know. We don't know who's buying down here, but somebody is buying. And of course, if they're buying, what do we always say? We got to watch the dollar. So let's go take a look at the dollar here, okay? Dollar is a little bit weak. Let's go ahead and look at this on a daily basis. Yeah, I would say if the dollar, if this low at 92.25 gets taken out, the dollar, oof, gosh, that could all the way down to this value area at 88, which would mean what for gold? Gold would pop and go hard to the upside. So we have to watch this very closely here. The dollar and gold are correlated probably better than any other pair that I'm aware of in the trading area. So if this, let's go look at the area we want to look at and where our risk would be. So right now, the risk area is right below this zone right here, probably 20 or 1277, 1275 area. If we can hold this area right here, then gold has a great chance of taking out this 1318. And then, of course, we went back a long way to see what else is out there for targets, and we found a target, and of course my target got erased, so I apologize. So we'll put that right back up there. That target is right up here at this 1348 area. So let's go ahead and put that target up there. 1348 area, we like that target there. We think that if the dollar continues to sell off and gold holds, we think we could easily see that in the near future here. If it continues to break up there, we have an acceptance area at that 1377 area. That would be another target as well. So gold, again, like gold, has some good opportunities for us. You just have to be patient, define your risk, and manage the trade once you're in it. Now, as we said, I know somebody's going to text us or email and say, well, you said that gold was weak. I said, you know what? Gold may go up. It depends on your time frame. It may go up later. George Soros may be right, okay, but his time frames are a lot different than ours. He can hold on to this thing for months on end before he gets what he wants. I don't think a lot of people that we're talking to right now can hold that position for months on end and take heat. If that thing were to roll down, let's say down into this 1100 area, I would like to know how many people can hold that position, take that heat before it rolls back up and gets 1400. Well, I can't, you probably can't, George Soros can. So he may be right because his time frames are different than ours. However, we will take a trade down below here and we'll take a trade right back up and maybe get some more up here. These are great trades for all of us, and we can trade around positions like that. So right now we like gold to the upside. It has proven to us that it wants to try to play to that side, and we have some nice targets to the upside as well. All right, let's take a look at our friend the euro. The currencies, Josh said last week he's waiting on the currencies. There's just nothing to really do there. We agree with him on that. There's no reason to play right now. Here's why. This stuff is chop and slop in here. We have the Brexit vote coming up in this coming week. That's going to be craziness. The euro is going to move. It's a coin flip at this time. So is there a risk that we can look at that there's possible opportunity at? Possibly down here. This is a bull flag right now. We have a lot of support down here at the 111.07 area, but I put some risk down here, opportunity zone down around 110.15 to 110.35, 110.40 area right in here. Just below this, there's an opportunity for this thing to swing back up and go to the upside. Now, if this thing gaps up and goes, we're just going to let it go. There's just no reason to try to play in this market until the European Union figures out what's going on with Britain, Great Britain. Are they in? Are they out? What's the question? We don't know. And at this time, we're not willing to put our hard-earned capital at risk and wait for those knuckleheads to take it from us, because it just isn't worth it, guys. So wait for this one to move. Again, if it does move down here and there's an opportunity for that thing to hold, your risk is very small there, and I would play light. And it's even a question if you want to play that or not. So euro is a caution. All the other currencies are caution too at this time. Again, just waiting on what the European Union and what our friends over in Great Britain are going to do. So be patient with that one. All right, let's hit the notes real quick and the bonds. All right, notes here are an interesting situation. The bonds went ahead and broke out, made new highs. The notes have not. We think that the notes will. We think with Janet speaking, there's a good chance of these notes going up and taking out this 133.01 area, and then there's another target at 133.24, 25 area up here that seems like a magnet, sort of a little cup and maybe a handle forming here. We like the zone right here at 131.09 down to 130.30 area. That's quite a big zone. Listen, you can play this zone in a lot of different areas. You can wait for the trigger. You can sort of scale into it, but risk has to be below this. If they take it out, they're probably going to go down and meet this POC down here. But we like this to hold, roll back up, take out the 133.01 right here, and then go up and continue up into that 133.24. If the notes and the bonds continue to go up, obviously interest rates will continue to drop, which is going to put a lot of there's a lot of choices that Janet and her team are going to have to make based on those. And I'll tell you, it's getting squirrely in the U.S. right now, as it is around the world with the central bankers. They're trying to hold things up. I think it's about time for that hammer to drop for these guys and gals. It's a matter of everybody losing confidence in what they're trying to do, because they're trying to do everything under the sun to keep a market going north. They've done a pretty good job of it, but with debt loads and stuff, it may be a losing battle long term. Now, what does that mean for us as traders? Well, it means a lot of volatility. Sometimes not the kind of volatility you like, though. You got to be careful, because you can get into a lot of chop. And I would say that some of these people, let's go back and look at the euro. With the way Draghi has been working things, you've seen all this chop and slop in here. This is very hard to trade in this type of environment, because you don't know if she's going up or coming back down on this thing, and you're wanting to look for a sustained move for a couple weeks or maybe a week. It's very difficult. We have prices that came down. They created value down here, and boom, they just got ripped apart. So all these people who were short just above value here just got hammered, got taken out, and of course you can see the accelerated move. When you see an accelerated move like this, you know that stops are being ran. All right, now what's the other side of this? Here's another situation. This is a huge move. We balanced right here. Well, what's the logical thing for this to do? Well, to continue up, we've got an accelerated move right here, or what we call an igniting move, and then it balances and you should see more upside. Probably should go up and test these areas up and around that 115. However, we didn't. It rolled back over. It came back and tested this value. It bounced. Now where do you go? Well, we're just winding tighter and tighter, probably waiting for Janet to speak, probably waiting for the Brexit vote. We're waiting on a lot of different situations here. So unfortunately, with central bankers talking and people getting tired of them talking, that creates a lot of volatility, which can be sometimes good for traders, but also can make difficult situations for traders because there's not an exact direction that we're looking that we can get into and get going on. So be very careful looking at your markets. Watch our videos to make sure that you can get some insight to maybe where the risk could be, where you could get into a trade, where there's opportunity, and where you're going to lose the least amount of money if you were to lose any money at all. And you just have to understand, trading is a game where money can be lost. You have to be very careful. You need to consult individuals with that to make sure that you have enough risk capital to be able to partake in this. So anyway, guys, bonds, same thing with the notes. We went up here and we just poked up above this most recent high of that 170.25. It got hammered down pretty quickly. Again, we want to see this market hold that 166.31 up to that 167.14 area. If this area, this zone holds, then I think we have more upside. We can take that 171.07 out, and then we're off to the races as well for a little bit more. I think that's all we got this week, guys. It's going to be an interesting week. Again, remember the news. The news is really not important, but what is important is Janet testify 2 days in a row. Guarantee we'll see some type of movement out of that. And then, of course, if you guys are struggling, you need some help, go ahead and roll over to our website, Market Profile Trading Academy. Go to the free resources tab. Let's go there together as it pops up. We have all these free resources down here. We have videos, we have webinars, we have all kinds of things in here that will help you trade management, trade execution. Take a look at these things. If you're struggling, reach out to us. We'd like to help you guys out, get you back on track, get you trading profitably, and building your dreams as well. So anyway, guys, hey, hope you have a great rest of the weekend and have a great trading week. Be good, be safe, good trading.